And this is my cheat sheet for Friday, January the 14th. Just another reason why stock dividends are so important. Just to review my overall investment strategy for building long-term wealth, the basic premise under which I like to invest, and I encourage others to use, is to find companies that are growing top line, that means revenue and whatever their business is, year over year, companies that have more cash than debt on their balance sheet, and companies that pay a dividend that is better than what you can get in fixed income where you don't take on any risk. If you reinvest those dividends, historically, you are going to end up in a far better place than the average investor. Now, that's not to say that you can't trade stocks and make money and get into non-dividend payers and make money. I mean, you certainly can. I mean, take a look at Apple. They still never paid a dividend. All kinds of wealth that's been created there. But it's about playing the averages and historically. Historically, 2/3 of all investment returns, so 67% of all investment returns, actually have come from dividends. And that's throughout the entire history of the stock market, meaning that only 33% of all the appreciation ever gained in the stock market actually came from the value, the face value of the stock itself rising in value. That's becoming even more important these days. When we take a look at the most recent year, 2011, when you average out the S&P and the Dow, you take a look, and the overall stock market return last year was 2.1%. That's low. The average historic rate of return in the stock market is just over 8%. But what's important is, in that 2.1%, guess what the overall yield was on average for the stock market? 2.1%. In other words, when you average out all companies that you could have invested in, the only way you gain total return was through dividends. Otherwise, you would have ended up flat, and really, by the time you factor in inflation, you would have lost money in the average stock last year, and certainly a non-dividend paying company. Still a little food for thought for your investment portfolio. All right, take a look at the president's re-election odds. I do this every Friday. We use historical factors using an approval average. I look at the running average of all of the polls. President Obama, as of the time I'm recording this, has a 45.5% approval rating. Now, I always round up or down in these things, and that means 0.5 goes to 46. That's significant because the story I'm getting ready to tell you would be different if it's 45 versus 46. But we'll give them the benefit of the doubt here, and here's what it means. We are closing in on 10.5 months away from Election Day. When we take a look at a 46% approval rating, about this period of time away from Election Day, historically, the incumbent president will have a 56% chance of winning re-election, meaning that the odds are still in President Obama's favor for winning election. We take a look at the Republicans in the weekly roundup here. We are seeing that the race in South Carolina is tightening up quite a bit. We're going to have another poll that comes in South Carolina this morning that should show the race tightening even still far greater between Mitt Romney and Newt Gingrich. But the bottom line is we still see Newt trailing Mitt Romney in a running average of all the polls by 9 points, followed by Rick Santorum at 19 in South Carolina and Ron Paul at 11. More stark is what's happening in Florida. Mitt Romney ended up having a semi-impromptu visit in Palm Beach County yesterday, and in Florida he is still surging. Mitt Romney right now is showing a 38% vote in Florida and a running average of the polls. Newt Gingrich second at 22. Followed by Rick Santorum at 16 and Ron Paul at 9. So the momentum game in Florida is certainly behind Romney. We'll have to see what happens with Newt and his attacks on Mitt in South Carolina. And a couple things real quick. A round of airfare increases, the first of 2012 thus far. $10 increases from all the major airlines on flights that are more than 1,500 miles in total duration. This is something that was anticipated as we continue to see fuel costs heading higher in the new year. Certainly is passing through to jet fuel as well. And Bank of America and Chase missed a deadline. Remember the whole robo-signing thing that came to a head early last year? Well, many of those homes that were under review, the docs were under review with Chase and Bank of America, were supposed to have been completed yesterday. They missed that deadline, and they're saying that they may not be completely caught up until November, meaning that if you had a home that was in this foreclosure review process, it doesn't look like it's going to finish up in the process anytime soon, and the year might almost be up before it is finished. That's a look at the cheat sheet for today. Enjoy your weekend. We'll see you Tuesday.